Hey there, future financial wizards. Welcome back to the channel where we make sense of money, sprinkle in a little humor, and throw in some life-changing tips for good measure. Today, we're diving into universal life insurance. Yes, the magical unicorn of the insurance world that promises flexibility, investment growth, and life coverage all rolled into one. Stick around, and by the end of this video, you'll know how it works, its pros and cons, and whether it deserves a spot in your financial toolbox. Oh, and we'll toss in a few jokes because, hey, it's insurance. We need to keep things lively. Okay, let's break it down. Universal life insurance, or ULI for short, is like the Swiss Army knife of the insurance world. It's got options for everything. At its core, ULI is a type of permanent life insurance. It offers life coverage, keeps your loved ones financially secure when you're no longer around. Cash value component. Part of your premium goes into a savings account that earns interest, like a savings account with a secret identity. Flexibility. You can adjust your premiums and death benefit as your needs change. It's basically insurance for the indecisive. I want life coverage and a little side hustle for my money. Here's how it all goes down. Premium payments. You pay a premium, and part of that goes toward your life insurance costs, while the rest goes into a cash value account. Interest earnings. The cash value earns interest, usually tied to a fixed rate or an index, depending on your policy. Flexibility in payments. If you've built up enough cash value, you can use it to cover premiums or even skip payments for a while. Death benefit. Your beneficiaries get a payout when you pass away. Sounds cool, right? But don't start throwing money at it just yet. Let's dig deeper. There are actually different flavors of universal life insurance. Traditional ULI offers a fixed interest rate on your cash value. Steady, reliable, kinda like your grandma's cooking. Indexed ULI ties your cash value growth to a stock market index like the S&P 500. More potential for growth, but still some safety nets. Variable ULI lets you invest in sub-accounts like mutual funds. High risk, high reward, it's the daredevil of the group. Pick your flavor carefully, folks. It's like ice cream. Everyone's got their favorite, but you don't want brain freeze. Now for the good stuff. Here's why people love ULI. Lifetime coverage. As long as you pay the premiums, you're covered for life. Flexible premiums. You can pay more, pay less, or even let your cash value cover the costs for a while. Tax advantages. Cash value grows tax-deferred, and you can borrow from it tax-free. Investment growth. Depending on your policy, your cash value can grow significantly over time. It's like having an insurance policy that moonlights as an investment fund. Okay, let's talk about the not-so-great parts. High fees. Administrative costs and mortality charges can eat into your cash value. Complexity. It's not as straightforward as term life insurance. If you're not paying attention, you could lose money. Market risk. With indexed or variable ULI, your cash value can fluctuate with the market. Premium adjustments. If your cash value underperforms, you might need to pay higher premiums to keep the policy active. ULI can be a great tool, but only if you know how to use it. So, who's the ideal candidate for universal life insurance? High-income earners. If you've maxed out your 401k and IRA, this could be a tax-efficient way to invest more. People who want flexibility. If your income fluctuates, ULI gives you room to adjust. Long-term planners. It's ideal for those thinking about estate planning or leaving a legacy. If you're on a tight budget or don't need the investment component though, term life insurance might be a better fit. Think of universal life insurance like planting a garden. You start with seeds, your premiums, nurture them with water and sunlight, interest earnings, and eventually grow a thriving garden, your cash value. But if you don't tend to it regularly, pull weeds, add fertilizer, it can wither away. ULI requires attention, folks. Here's your step-by-step guide to investing in ULI. Set your goals. Are you more focused on life coverage, investment growth, or both? Compare policies. Shop around for the best rates and terms. Understand fees. Make sure you know what you're paying for. Work with a pro. A financial advisor can help you navigate the complexities. Monitor and adjust. Regularly review your policy to make sure it's on track. Pro tip, don't buy ULI just because your neighbor's cousin's friend said it's great. Do your homework. And there you have it. Universal life insurance can be a powerful tool for building wealth and protecting your loved ones, but only if it aligns with your financial goals. If you found this video helpful, do me a solid. Hit that like button to let the algorithm know we're doing something right. Subscribe so you never miss another deep dive into financial wisdom. Share this video with anyone who's thinking about life insurance or just wants to grow their wealth. Thanks for watching, and remember, every great financial journey starts with one small step. See you in the next video.